Welcome back. With all the news over Europe's fiscal crisis, it's easy for trouble at home to sometimes get lost in the headlines. But state budget deficits have risen to $140 billion. That's the most since the start of the recession. Despite those staggering figures, our next guest says it is still safe and it's still a good time to go into municipal bonds. We're joined this morning by Alexandra Lebenthal, President and CEO of Lebenthal. Alexandra, thanks for coming in today. You know, no less than Warren Buffett has come out and said he sees reasons to worry in terms of the health of so many municipalities in this country. He's even said he would not be surprised to see the federal government have to come in and bail out a municipality. Why do you think it's still safe?
Well, first of all, the municipal market is an enormous market, so it is actually difficult and probably in some cases dangerous to generalize the entire market. And also we should bear in mind that within every state there are numerous issuers. Some of them are general obligation, they're backed by full faith and taxing power, and others are revenues backed by a specific stream. Clearly we are in strange times and have been for the last number of years, and there have been many states that continue to be in the headlines. But again, I think it's important to look at each individual security rather than the market as a whole.
So perhaps it still is overgeneralizing things here, but it sounds like you're saying some of this project financing is more worrisome than the municipalities themselves?
Well, look, there are a few states right now that are very much front and center. Illinois is the latest one. California, a year ago, was one that people were talking as if there was going to be a federal bailout. There's Michigan, there's New York. Clearly, there are individual states that are in dire situations right now. But again, I think it's important to look not necessarily at the ability to pay. It's really important to look at actually what's going on politically, which is within each state, which is really what should make all of us as taxpayers and as voters, quite angry at the fact that our politicians within these states don't seem to actually focus on what they need to do to get their budgets balanced and then move on.
Right. It does seem to be getting a lot more attention these days than ever before. So perhaps we will continue to see some action, maybe, start on that front. But talk to me about how the issuance of Build America bonds has perhaps filled up some of the appetite that was there for these kind of investments. I mean, it seems like there is some question over, well, whether or not Build America bond program will be extended for another 2 years.
Right. Build America bonds have really been one of the most interesting things and really market-changing things that's happened to municipals in the last number of years. Just a brief recap, with the Obama stimulus, there was a new class of long-term, essentially, municipal bonds created whereby there is a federal subsidy given to the tax-exempt issuer, the previously tax-exempt issuer. So they still have generally their same cost of issuance. The bonds, however, are taxable. What that has done for the market is to actually expand the marketplace so that now there are more institutional investors, taxable investors, who are able to buy these types of bonds. You're right, there has been discussion about the extension of BABs and how long that will continue, and actually equally as important is what will the amount of the federal subsidy be? Will that go down over time? I do think if that subsidy continues to go down, then you do have the municipality saying, well, we might as well issue the tax exempt rather than the taxable bonds. But it's really been sort of a, as I said, a very, very new and readily accepted thing, which is interesting given how much the municipal bond industry had always fought taxability in the past. Well,
what kind of appetite exists? I mean, should that extension not happen for another 2 years for Build America bonds? Is there still appetite if there is further issuance of traditional muni bonds, given so many negative headlines about budget deficits right now?
There are, for two reasons right now. One is taxes. Taxes are going up. They have gone up. They will will continue to go up. So the higher your tax bracket, the more valuable a tax-exempt yield is, because you'd have to get that much more from a taxable investment. The other thing is that right now municipals are yielding an enormous amount as as a percentage of treasuries, which is how we normally track how attractive the market is. So you can get over 100% of a treasury yield in certain cases. So you're not even factoring the taxes in. You're already actually getting a better yield. So again, that makes this an attractive market right now. Again, people need to look at specific issues. This is a time when having a professional in the municipal bond business, picking your bonds or managing your bonds is very, very important. I think the days in the past of people just buying them individually from brokers are probably waning somewhat, particularly with the loss of bond insurance, which has really ceased to be, for the time being, a relevant factor in the business.
All right, Alexandra, thanks for coming in and giving us a reality check. Alexandra Lebenthal.